I want to talk to you a little bit about market bubbles. What is a market bubble? Well, when we talk about a bubble, we're talking about a really rapid escalation in the price of some asset. Typically, we're talking about stocks. We're talking about these stocks that for whatever reason explode in price over a number of weeks or a number of months. Basically, it's all this frenzied buying in something, especially when it's seems like it's overvalued, where people are buying up a stock to the point to where it doesn't seem like it's warranted. Now, there are two stocks that are in my mind when I talk about current market bubbles, especially those of you that are investing in these things. You really need to be careful. These stocks are Nvidia and Gamestop. So Nvidia, since the beginning of 2024, Nvidia's share prices went from like $480 to over $1,200 a share. That's like 150% increase in just 6 months. So we're talking about from January of this year till I'm recording this video early June. So in 6 months, it has basically 2.5 times its share price, right? 150% increase. That is insane. If we go back to the beginning of 2023, so the last year and a half, then we've seen like a 700% gain in Nvidia's share price. This went from like $140 a share to over $1,200 a share in a little under a year and a half. That's crazy. We've seen similar episodes with GME, GameStop. At the beginning of this year, January 1st, 2024, GameStop was trading around $16 a share. And then just a few weeks ago, it saw that explosion in price all the way up to nearly $49 a share. Again, in just 6 months, $16 to $49. That's crazy. Of course, that $49 price didn't hold. It came quickly crashing back down. But then just a couple of weeks after that, it exploded back up in price to like $46 a share. So, you can see some extremely large gains. If you're one of these people that have the gambling mindset and you want to play these things, you can make an incredible amount of money. You can also lose an incredible amount of money. And what's interesting with GameStop is this isn't the first time GameStop saw this kind of frenzied buying. You guys remember back in 2021, the Wall Street bets craze where everybody was buying up all the meme stocks, including GME. And at the time, it was trading for around $4 a share and it exploded up to like $80 or $90 a share. If we're talking about adjusted prices, there's been a split somewhere in there since then. But we're talking about a 20x increase in share price back in 2021 for GameStop. Now, of course, that 20x gain, that didn't hold, right? The stock price came crashing back down rather quickly. If you had invested at the top, you would have lost your shirt, right? You would have had your account cleaned out, especially if you did something really risky like, for example, sold naked options on GameStop. So if you were selling, for example, naked puts, thinking that it was just going to keep going up forever and, it comes crashing back down, obviously you were opened up to unlimited risk on those naked puts. And again, you could have blown up your entire trading account. And certainly some traders did do that. Now, I think the hype and the frenzy around some of these meme stocks is good for the stock market. And yes, I do include Nvidia as a meme stock, even though it's a real company, unlike GameStop. Nvidia is not going bankrupt anytime soon. Like Nvidia is a legit company that may see long-term growth if you buy shares and hold it long enough. But in the short term, these meme stocks are very dangerous because what they're being valued at right now today, I think those prices are extremely dangerous. It's extremely risky if you're jumping into these things today. And while I think these meme stocks are good as far as they're bringing in new participants to the stock market, there are so many more millions of people trading and investing due to things like GameStop and AMC, and of course the rise of AI, and of course all these people buying Nvidia and making a ton of money on buying out of the money Nvidia calls. So many people have made incredible riches trading these things. And obviously, when people hear about all these people getting rich trading things like Nvidia, naturally people that are not normally in the market and people that have never traded before, they get curious. They want to know about this stuff. And we see so many more people now pouring in to invest in these things. And of course, when new investors show up to invest in things like Nvidia, the new investors help drive the stock price up even more, and the frenzy just keeps going. And if you're somebody that's a trader or investor and you haven't been trading Nvidia, and you see all these people that are posting on Wall Street bets and all over social media talking about the huge gains that they made trading Nvidia, naturally FOMO starts to creep in. FOMO, of course, is the fear of missing out. You don't want to be left out of this party. Everybody else is making all this money. You don't want to be the only one that's left out in the cold on this thing. So naturally you want to jump in, but is it too late? And this FOMO, this fear of missing out, this is actually a normal kind of emotion, especially for traders, because as traders, all of us, even though we fight it, sometimes unhealthy emotions start to creep in. These unhealthy emotions include things like greed, fear, jealousy, right? And once you let fear, greed, jealousy, these kinds of things creep in, naturally, then the fear of missing out, that starts to build within you. And once that FOMO reaches a certain level, you just have to jump in with everybody else on a product like Nvidia. And while I think a large percentage of the people that are buying into Nvidia this late in the game are sufferers of FOMO, not everybody that's buying into Nvidia right now are suffering from FOMO. Some of them are actually betting that there's a large number of even greater fools out there that are going to buy in at a later date than they're buying in, and they're essentially hoping to profit from somebody else that is more foolish than they are. In the financial world, we call this the greater fool theory. Basically, it's this theory where it's okay if you buy into this overhyped and overpriced stock, as long as you can then turn around and sell it to an even bigger fool than yourself for a profit. So this is the greater fool theory, and it's something that occurs all the time in market bubbles. Is these prices, they just start exploding. Think about the dot-com bubble back in the late 90s, early 2000s, where all the internet stocks were just going parabolic, to the sky. They were just exploding in price, and these companies, they were in no way valued correctly as far as based on fundamentals. It was just all this frenzied buying because everybody saw the internet stocks exploding in price. Everybody saw people making money with it. Everybody wanted to make money with it. So everybody jumped in until finally there comes a point where there's no more buyers. And when there's no more buyers, there's no more greater fools to buy into that product. What happens? Well, it all collapses. It all comes crashing down. And that's exactly what happened with the dot-com burst, right? Is, in 2000, 2001, 2002, the stock market just took a complete dump, and a lot of people lost their entire fortunes. So the AI craze with Nvidia, I don't think we're quite there to where the bubble is going to burst. I mean, who can predict these things? Again, the market is random, but there will come a day when there are no more fools to buy into it, right? So eventually we're going to get to a point where everybody that would have bought in has already bought in. There's no more investors left, and what happens then? That's when that bubble bursts. Essentially, these market bubbles act very much like a Ponzi scheme. Now, they're technically not a Ponzi scheme. There's nothing illegal going on. Nobody's scamming anybody here, but they act very much like a Ponzi scheme. And what a Ponzi scheme is, if you're unfamiliar with that term, that's a scam where you pay early investors by taking money from later investors. The most famous Ponzi scheme was created by a man named Bernie Madoff back in the late 90s, early 2000s. He ran a fund, an investment fund, where he actually didn't take money that was invested into the fund and traded. He was actually running a Ponzi scheme. He had all of these rich investors giving him tens of millions, hundreds of millions. He was actually in control of tens of billions of dollars at one point. And all he was doing every month for the returns that he supposedly invested, he was paying the early investors with money he was getting from new investors into the fund. And as long as he had more new investors, the fund would live. But eventually what happened was the market had a downturn. This was around the great financial recession. And then once there was no more investors willing to pour in all of these hundreds of millions of dollars in new funds to the fund, right? What happened? Well, of course, the whole thing collapsed. And of course, he went to prison, where he died in prison. And he was just a horrible, horrible man who scammed a lot of people out of, again, tens of billions of dollars. It's probably the largest Ponzi scheme ever in history. And this is exactly what goes on when you have a meme stock craze like GameStop, right? It's all of a sudden everybody jumps in and the price explodes. People start getting the fear of missing out. So more and more people pour in, driving the price. But eventually what happens? Well, again, it's essentially a Ponzi scheme. At some point, everybody that's invested, you know, the new investors are paying the early investors, but essentially there's no more new investors. And then what happens? Well, when there's no more new investors, then the people that are trying to sell can no longer get out at a favorable price, at a higher price. They can no longer sell to a greater fool. Now they are the greater fool, right? The only people they can sell to now are actually lesser fools than them, which now the price has to come down, right? Because they have to sell at a loss. And then all of a sudden everybody starts selling at a loss. And what happens to the price? Well, it just crashes, right? And that's what happens when these bubbles burst, right? Once the Ponzi scheme has played itself out, the bubble bursts and that price just comes down like a ton of bricks. And of course, there's a phenomenon with this where, you know, not everybody wants to unload their shares at a huge loss. So as the price starts crashing, there are some people that are holding shares that just refuse to take such a big loss. So what do? Well, they just decide to hold and hope. They're going to hold their shares and hope one day the price, for whatever reason, makes a run again, and maybe they'll get out for break even or even a small profit. But that rarely ever happens. Essentially what happens is these people are left just holding those shares for years. We call these people bag holders because at the end of the day, when this bubble bursts, they're the ones left holding the bag. The bag holders are essentially the ones that ultimately pay for the Ponzi scheme. And while you could feel bad for these people, that many of them lost their life savings due to such an event by playing these meme stocks or these frenzied AI plays like Nvidia, I certainly feel bad for anybody that loses money, but ultimately who is responsible for them falling into this trap? Well, they only have themselves to blame, because it was ultimately their greed and that fear of missing out and basically a lack of discipline that led them to ultimately buy into the Ponzi scheme, especially buying into the Ponzi scheme really late into the Ponzi scheme, because they thought they would find a even greater fool than themselves. Essentially, they were hoping they could sucker someone else to hold the bag instead of them. So at the end of the day, while I certainly feel sorry for people that lose their money on these things, it's really hard to feel that much sympathy for them. Now, I'm making today's video essentially as a warning to those of you that want to play Nvidia and GameStop and things like that, because these things will crop up every few months. Every few months, there will be another meme stock that's exploding in price that everybody's jumping on to the same bandwagon. And I want this video to serve as a warning, right? And I don't want to sound like I'm some kind of old boomer trying to tell you what to do, because ultimately, we all make our own decisions with our finances. We all ultimately make our own decisions in life. But here's the thing. If you're wanting to play one of these kinds of meme stocks, I just want you to be armed with the right information. Essentially, I want you to be well informed. I want you to know what you're getting into. I want you to recognize these things for what they are. I want you to recognize that these are obviously market bubbles. They're obviously meme stocks, and I want you to be very, very careful if you choose to play these. Because if you go back and examine all the various market bubbles throughout history, since the beginning of human existence, right? At least human history, since we've been writing things down, there's always been markets, there's always been market bubbles, and you know what has happened to every single market bubble? They burst. That's a fact. Every Ponzi scheme eventually runs out of new investors. Don't be one of those bag holders. Now, if you want to play these things for fun, if you've got that gambling mindset and you want to take a small amount of money and play it, go ahead. If you want to play these things just for engagement purposes, maybe you're new to trading and investing and you see all the news around things like GameStop and Nvidia, and you want to play them just to follow along with the event. Again, if you want to do that with a small amount of money just for fun, yeah, go ahead, but do not put life savings into this thing. Do not put anything that is a significant amount of your net worth into a play like GME or Nvidia. That is a recipe for absolute disaster. Always remember the #1 rule in risk management when it comes to trading: stay small. Peace, guys.